Hi everyone, how are you feeling today? So we're live for another live stream, and today, like every other live stream, I'm gonna keep it as simple as possible. I'm gonna talk about the upcoming week. We have some important things coming up regarding earnings reports, and also we have the meeting minutes of the FOMC will be released. So I will just go through the earnings first. We'll talk a little bit about the minutes, and then we will have some, topics to cover like commodities, um, and so on. It will be interesting, that's for sure. So first of all, in terms of earnings, there are many earnings coming up, but I highlighted the most important ones in my opinion. So on Tuesday we have Walmart, and they will be reporting before the market opens, and the earnings per share estimates are at $1.60. Okay, so if you watched my previous live streams, you know by now that a lot of things can affect the price movement of a stock, and the most important ones are whether the company misses its earnings expectations, whether it's on the top and the bottom estimates, either the revenue or the earnings. And another important thing on top of that is the guidance that they give us for the future. So again, if you watched my previous live streams, you will see that I talked about basically how in Facebook's case, the company missed both on top and bottom earnings estimates, and also provided lower guidance. That shattered the stock. It went down by 25% then, 2 quarters ago, if I'm not wrong. And now Walmart, there's I don't think there's high expectations, but people are waiting for these reports because it could give us a glimpse of the state of the consumer. So I'll be watching that. Last time Walmart basically fell when they reported their earnings by, if I'm not wrong, 8%, because they missed on their estimates, and they also provided some not that good of guidance for the future. We also have Home Depot on Tuesday. Expectations are that the EPS will be at $4.9 per share. The earnings per share will be $4.9. So we need to see how these two companies actually report their earnings. I'm gonna be reading and probably also covering those earnings reports. I'll do it on my Instagram, that's for sure. If I have some time, I will also go live on YouTube and probably talk about those earnings reports, and we will kind of see how the market will react to these earnings reports. And it's important to see whether Walmart and Home Depot, give us, let's say, guidance that's lower than expectations, and also to see what they're gonna say about the consumer, whether the consumer is still strong, whether they see that, let's say, for the future, the consumer will still spend money. Are they cutting jobs? Walmart is already doing that, by the way. Will they cut more jobs? So we need to really see what happens with these two companies. And then among others, there's also on Friday there's Foot Locker. I'm mentioning Foot Locker not because it's as important as Walmart and Home Depot. I'm mentioning Foot Locker because Foot Locker is a company that currently trades at statistically cheap valuations in terms of PE, in terms of price to sales ratio, but it is cheap for a reason. And I go to Foot Locker stores, and I see that there's not a lot of people shopping over there, but there's always could be a surprise. We'll never know. Again, we need to see how the company also will report and tell us what's going to happen in the future with it. Now, going back to important events, then we have on Wednesday at 2 p.m. Eastern Time, the FOMC meetings minutes will be released. Okay, so the Fed minutes are released basically 3 weeks after the date of the policy decision. So they are basically just a piece of communication, okay, and they detail the stance of the Fed on the monetary policy. And basically the Fed controls the economy by basic actions, like they're not basic, but by actions like increasing or decreasing rates, by by basically buying or selling securities, okay, mortgage-backed securities, selling treasury bonds to the banks or buying it from them, and also by raising or lowering reserve requirements for banks. And basically this is how they control the money supply in the system. And if history is any indication, whenever the Fed tightens the economy, the stock market falls, and whenever the Fed expands the economy and has accommodative approach, then the stock market rises. And we saw it back in March 25th in 2020, when we were in the heart of the pandemic. And basically when the Fed said that we're gonna support the market at any cost, and they were printing money like crazy. By printing money, when someone says printing money, there's not really printing money. What they mean is that the Fed buys bonds and mortgage-backed securities and buy treasuries from the banks, and when they buy these things, they give them cash, and then the bank has more cash to lend to people. And then if there's more cash, then the price of cash goes down, the price of money goes down. Okay, so this is basically the whole equation. So even though in March 25th, when we were in the heart of the, during the worst times of the pandemic, the stock market went crazy. And that because the Fed basically became, more lenient and expanded the economy. So over here, March 20th for the Nasdaq, it was the bottom. I think for the S&P 500, I don't know why I remember March 25th. This is the date that I remember, that I have it in my head. Maybe it's the S&P. Well, it's basically March 20th then. March 20th marked the bottom. And we can see over here how the market basically exploded after the Fed started being more accommodative to the markets. And many people, by the way, are arguing right now that even though the Fed hiked rates, it's still not tightening the economy, because we're not, like, if we take a look at historical rates, we're still at a very low point. And it's still not considered a tight, let's say, policy or an economy where interest rates are not accommodative or are not good for, let's say, lending activities and people for purchasing houses and etc. So this is basically it about the Federal Reserve. And the one earnings report that's also interesting, in my opinion, is going to be Target, which is going to be also released on Wednesday, and it's also before the market opens. And the consensus is that the earnings per share will be released, and they will be at 71 cents. So Target also dropped very, they fell by, I think, 20% when they released their last quarterly earnings. And if I'm not wrong, they sell at a very low PE right now. Let's see, Target stock. They sell at a 14 PE multiple, which is, quite attractive for a company like Target. And here we can see the fall, by the way. They fell by 30% from May 17th until May 24th. Okay, and that's basically after they released their earnings report. On the same day, they fell by 25%, and then they kept on falling, and they fell by 30% until May 24th. So I'm gonna also check, of course, Target's results, and if anything, I will cover them on my YouTube channel. But on Instagram, if you follow me, you're gonna see that over there, that's for sure. Oh, I have one viewer. Hi, everyone. So for everyone who's watching this live stream, it's nice to have you. And if you have any questions, drop them in the chat, and I will probably answer them if I can. So feel free. Other than these things that we just covered right now, commodities are on the rise again. So basically, if we take a look at the commodities prices heading to the last, let's say, earnings report, last CPI numbers, commodities prices just fell. Okay, and now the canola, lumber, copper, and oil, all of them climbed last week. Cotton also climbed, and I'm mentioning cotton because basically I covered Levi stock in my last live stream, and this is a stock that I bought or started like a position in it, which will be interesting to follow because mainly the material that they use is cotton, so we need to check what's going on over there in case we're in Levi stock. Basically, the energy and the food prices are still rising, and that's because of the war in Ukraine and Russia. There was some easing with like deliveries, letting Ukraine give some grain and whatever, ship some grain and stuff, but still there's a lot of tension over there, and I really hope everything gets resolved, and I hope that's gonna be, we're gonna get into a better like times. Now, let's talk about the stock market in general. Okay, so basically, let's take a look the 6-month view. Okay, basically we had the S&P 500 basically climbed 16%. Okay, and that's a very nice, bull run, 16%, a very nice rally. But then we have Michael Burry. And if you don't know who Michael Burry is, he is the guy that predicted the 08 bubble, the housing bubble, and he shorted it and he bet against it and he made tons of money for his investors. And he also predicted that inflation will explode because of the Fed's action and the government action, the whole monetary and fiscal policy. And he was right on that too. And now he's predicting that basically we are still in a bear market and we have some pain ahead. What's gonna happen, we never know. But not only him, by the way, it's not only that he's not the only one who's saying that retail investors should be cautious. Also, Morgan Stanley released a warning for retail investors, saying that the bear market didn't end yet, and it's trying to convince us, the retail investors, that we shouldn't invest right now or go all in on the stock market because we might still see some pain ahead. With that being said, you never know what's gonna happen. Hi Nafi, how are you? I hope I'm saying your name right. If you have any questions, just ask me and I'll try to answer them. Okay, so let's go back to Michael Burry. So Michael Burry has been very bearish recently, and he actually also predicted the last rally we had. He mentioned that companies having high levels of inventory and they had to cut prices. And when they have to cut prices, that means that inflation will go down because prices will go down. Because let's say you're gonna have a lot of discounts, a lot of markdowns, and then when we take a look at the CPI, we'll see a lower number, and it happened too. So again, no one knows what's gonna happen with the market. Macroeconomics is very hard to predict, and we need to see how this week will play out. Okay, one thing that I can say is that if you take a look at Warren Buffett, at Charlie Munger, Monish Pabrai, all of these people, all of them kept it simple. All of them, when they saw a good company selling at a good price, they just bought the shares of the company and they waited, and they always had cash on the sidelines too, because if anything happens, they have power to buy more of the share of the stocks or the companies that they like. And now, I was talking about Monish Pabrai, and I told you guys that I bought his book, The Dando Investor, this one, and I almost finished it. Okay, but I got to a chapter where he talks about Microsoft, and like these things. I don't know if you guys know, but for example, he just showed how Microsoft was a ruthless cloner at the beginning of its days, and how they cloned and how they crushed their competition every single time their competition popped up. They literally cloned their product and they made it theirs, and they used their powers to crush everyone around them, and that's how they became what they are. And how well, thank you for watching. Honestly, I really appreciate it. So back to Microsoft. So I'm just gonna tell you the story of Microsoft. Okay, so back in 1980s, Microsoft made a deal with IBM. Okay, this is the deal that made Microsoft basically scale. Okay, and the deal was that they needed to deliver the MS-DOS. Okay, for the personal computer. And the funny thing is that Microsoft didn't even have an operating system suitable for the PC to sell to IBM. Okay, so what did they do? They didn't say no to IBM. They lied to IBM, saying that they had an operating system under development and it will be ready within IBM timeframe. So what happened is that Microsoft actually went and bought all the rights of other operating system from a company in Seattle for only $50,000. And the flagship of the flagship product of Microsoft that allowed it to scale was basically not even developed in-house. They just took it from a company for only $50,000. And the same happened with Excel, and the same happened with Word. And if we take a look at recent history, we have Microsoft Teams, which was also cloned from Slack. We have Azure, which also was cloned from AWS of Amazon, and Xbox, which was cloned from PlayStation and Nintendo. So if you take a look at Facebook and you think that they're ruthless, know that Bill Gates didn't care about anything else before. And this is how Microsoft actually rose into its glorious days. They basically cloned and crushed their competition. By the way, Target is one of the stocks that I'm also looking at right now. I didn't invest in Target yet, but I'm really looking at Target, and I'm thinking about maybe it could be worth some initial position over here. Yet it still sells at a very low PE, which is 14.30. We need to see. I'm gonna wait for the next earnings report. Honestly, I just want to see how things develop. They might beat on earnings, and then the stock might just explode higher. We'll see how it goes. Another stock that I'm looking at and I like a lot, which might be very strange, is Crocs basically. And this company caught my attention because every time I go to any place where there is a Crocs store, there's a line. People are basically waiting to buy their products, and it just baffled me to see that there's people just literally waiting there in line every time. To every store I go, there's people waiting there to buy their products. And also, if you take a look at let me show you. So, and also if you take a look at the PE, it's selling for a very low PE. The price to sales ratio is not that high too. Quick ratio also 1.1. That means that for the last quarter, if you take a look at the balance sheet, Crocs had $1.1 for in cash for every dollar in current liabilities, and the current ratio means that the company is also very liquid. They have $1.90 in current assets for every dollar in current liabilities. Now, one thing that I don't like is the debt to equity. Well, the company is leveraged, but I believe that at some point they will start lowering the debt with all the money that's coming in from their earnings. I need to look deeper into this one, honestly. I need to look deeper into this one, but I really like what I saw. And also, if you check over here, you can see that the insiders are basically buying the shares right now. One thing that kind of, let me show you if I go like this. One thing that kind of like made me sad is the stock already went up by almost 50% in the previous month. But it's still down 40% year to date. So like, I need to read it. You need to read the reports. I need to go through the company and like, research it, and then I will decide basically if it's worth it and if I should go and start investing in Crocs. And that's basically it. Let's see if I have any questions. Well, that's basically it for the upcoming week, and that's the story about Microsoft. Also, just I wanted to give you this story because we all look at Facebook as this mean company, that just crush their competition with what happened with Snap, and it's not true, because if you take a look at Microsoft was ruthless too, and is still ruthless too. What they did with the Teams, and what they did with Azure, and what they did with everything else, the Xbox. This is the game, whether you like it or not. This is the game. This is what companies do when it comes to survivorship. Let's take a look at Wall Street Journal, what they have. What's your take on the pharma sector this week? I don't really know a lot about this sector. Do you have any company in mind that's gonna release their earnings, or let me know if you have any company that's gonna release earnings. I'm just gonna go with you right now and look for the ratios. Maybe I can also check what's gonna happen. Do you have any company in mind? I basically have a calendar. Let me see if there's any companies that There's Novavax releasing, right? On Thursday, if I'm not wrong. Okay, so let me know if you have any company in mind, and I will just go through it, see. I basically I had a position, by the way, in Walgreens before. No companies in mind. Just read an article about some cases that's going to take place, I guess, this week. Okay, you can just send me the article then. You can DM me or send the article over here if you have it, and then I will just go through, read it, and see if there's anything I can add value to it. I don't know, but let me know if you have anything like more specific, because it's gonna be hard for me to have an opinion on the whole industry or sector, because again, I'm not that acquainted with the whole pharma. Although I have bachelor's in biotechnology, but I flipped to finance. But still, let me know if you have a specific article or something you want me to read with you, or just go with it. Like, that would be awesome. The Wall Street Journal, one of my favorite sites, honestly. If anyone sees let's say an article and don't have an access to the Wall Street Journal, let me know. I can send you the link and you can read it fully if I send you the link, because I have the membership. So if there's any article you like about anything you read and you just don't have access because of the membership, I will just send it directly to anyone who asks, and you can have it and read it. Um, Yep, but the only thing that I don't like about, no, I mean, I like it. There's nothing that I don't like, but the only thing people might not like about the Wall Street Journal is that they prolong, like you have, I mean, the articles are very big. If you're in for just a quick, read, it's not, don't take the Wall Street Journal, because it's gonna be long read on every article. They just basically, extend, and they talk about everything. And CNBC would be good if you just want a quick read. And of course my my Instagram account would be also a good source if you want some quick news, because over there I give the extraction of everything. No, 2 hours ago, news was released about the consumer and factory data in China. Let's see. Retail sales grew by 2.7% in July from a year ago. The NBS said Monday that's well below 5% growth forecast by Reuters poll. But to their credit, I mean, China still was in lockdowns. 2 years ahead of the pandemic, they're still in lockdowns, which is horrible. I mean, industrial production rose by 3.8%, also missing expectations for 4.6 growth and a drop from the prior month, 3.9 increase. Beijing retail sales grew by. Now that could be bad news for everyone, honestly, not only China. China is the second largest economy in the world, and if China does bad, then it will affect us too. It will affect us too. Well, stock futures fall slightly ahead of big retail earnings week. Yep. As I just said, we have Target, we have Walmart, we have Home Depot. They're all very important. Um, earnings to watch. Here's a very interesting fact by CNBC. More than 90% of companies in the S&P 500 now reported earnings, and some 78% of those names have posted better than expected profits, according to Reuters. So that's a good thing. That's a good thing that we have companies beating expectations, But also we shouldn't be too optimistic about it, because basically, we had very low expectations. So that's also a thing that we should also pay attention to. Walmart and Home Depot will be first to report on Tuesday. Last quarter, Walmart cut profit estimates because of rising food prices, while Home Depot raised its full-year outlook. Also, fair thing to say about Home Depot, like I said about Crocs, every time I go to Home Depot, it's full. They have a line of people just waiting and to buy their stuff. Okay, so that's it basically. I'm gonna finish this live stream, and I want to thank whoever watched this live with me and asked me questions. Thank you a lot, Nafi, and have a blessed week, everyone, and let's make some money this week. I hope we'll have another rally, and we will see if Michael Berry is right again. If yes, then we're all screwed, unless we're hedging ourselves against this downturn. Ways of you can hedge yourself is, if you're not very good on options, you can buy, let's say, again, nothing is investment advice, just an opinion. there's an ETF called SQQQ, which basically leveraged three times, leveraged the Nasdaq 100. See SQQ. It's an ETF short QQQ, and it delivers three times the performance of the QQQ. That's it basically. With that being said, have a great day and have a great week.